Welcome to today's market report. European stock markets weakened on Thursday following the US Fed's decision not to provide additional stimulus at its latest meeting. DAX traded 1.1% lower, CAC 40 fell 1%, FTSE was down 0.8%. The Fed kept rates unchanged on Wednesday and signaled that interest rates would stay close to zero at least through 2023 to support the economy's ongoing recovery. However, in its first meeting since adopting a more tolerant stance on inflation, the US Central Bank gave no indication of when it might increase its monthly bond purchases, disappointing some investors hoping for further largesse. The focus now shifts to Bank of England, which is expected to announce its latest policy decision at 12 o'clock London time. The BOE is not done. More quantitative easing is necessary, and this meeting does provide a bit of an opportunity to shift things in that direction. The big cliff coming is on the employment side. In corporate news, Next stock rose 2.6% after the UK fashion chain raised its profit outlook for the full year for a second time. It said business had proven more resilient than we expected in the first half, despite a 34% fall in sales and a pre-tax loss. Rivals Inditex and H20 had both reported a return to profitability in the latest 3 months. Trainline also detailed the extent of the hit from the measures taken to curb the spread of COVID-19, with sales down 81% in the first half of fiscal 2021. That said, the UK-based company said trading started recovering in the second quarter with the relaxation of travel restrictions. Its stock rose 2.1%. IG Group, IGG, soared 5.6% after the online trading platform posted a substantial jump in first quarter revenue, benefiting from high levels of trading activities during those turbulent times. On the flip side, Natixis stock dropped 2.3% after its H20 Asset Management arm had to write down the value of Windnorst bonds by some 60%. Oil prices fell on Thursday, rebalancing after recent strong gains as producers in the Gulf of Mexico took steps to resume output in the wake of Hurricane Sally. The futures traded 0.8% lower at $39.84 a barrel, while the Brent contract fell 0.7% to $41.91 a barrel. Gold futures fell 1% to $1,951.4 per ounce. On the FX side, GBP USD staged a solid comeback on the 129 level so far this morning, although the bulls now appear to lack follow-through ahead of Bank of England monetary policy decision. The cable found solid bids at the 5-day long rising trendline support, now at 129.08. However, the rebound faltered at the horizontal 21 simple moving average on the hourly chart at 129.60. The European Union is being abusive to Britain and risking 4 decades of friendship, said the UK Prime Minister Boris Johnson. This comes after the PM said yesterday he had full confidence that Britain and the EU would avoid a potential disastrous cliff edge no deal at the end of this year. Earlier today, US Democratic presidential candidate Joe Biden warned that there will be no US-UK trade deal if Britain fails to honour the Northern Irish peace deal. The Bank of England is set to announce its interest rate decision and the asset purchase facility at 12 o'clock lunchtime. The central bank is widely expected to leave its policy unchanged, while investors will watch BOE's guidance amid a stop-start economy. The cable is snapping a 3-day winning streak despite the latest bounce of 129 ahead of the meeting. Eurodollar serves its 4-month uptrend at 118.26 as the pair trades to 117.70. Economists at Danske Bank now see the pair range as shifting from 118 to 20 to being 117 to 119, but stick to their core of 123 in 6 months. Following Powell's press conference, which will likely mean the US dollar negative reflation story is set to pause a bit longer. The dollar index was up 0.4% at 93.450. Dollar yen rose 0.1% to 104.99. This is today's market news. Thanks for listening. We'll see you next time.